What's going on, guys? We got to talk about the markets as there is a lot of pain, there's a lot of fear, there's a lot of questions and uncertainty going on in the charts. Now, I've kind of been looking at the charts from a macro overview, looking at the weekly and daily charts realistically since the start of this year in January. And essentially, let me just kind of zoom out here, right? Let me just zoom out a little bit more. We're looking at my big chart, so it's going to give me every area of interest here. If you kind of look at this chart from the start of December of 2024, we put in this nice little high here at 22,450. Around the date, okay, around the 2-3 day date of December the 17th, December the 18th, and December the 19th, we kind of put in this blow off top and we've pulled back. Now, ever since then, we've had this waving pattern essentially going sideways, essentially moving down. Okay. So when you really look at this situation, we've put in constant lower highs since the middle to end of December. Never a good thing. Okay. Now, again, Trump administration has taken office. We've had a lot of things. He's been working very aggressively, a lot of changes, tariffs, just a lot of things in general, okay, have been going on and taking place. Conversations with Russia and Ukraine, conversations with Trudeau in Canada and the Mexican president in Mexico. There's a lot of things that are going on right now, and the rapid nature of that market does not like uncertainty. And a lot of these drops came from the initial, like there was a drop, I believe, right in here that came from an initial tariff. Kind of, we're putting that 25% tariff on Canada and Mexico, kind of came here. And then he's kind of reiterated that again today going forward. And we've seen a little bit more of a drop. So what I'm looking at is once we kind of came down into this, this uptrend, and this uptrend that's being held right now is a linear regression channel 50. This uptrend that is being held right now is a 100-day moving average. Okay. So that we've been holding the 100-day moving average ever since. Every time we kind of get into this zone, we put in a nice dead cat bounce. We get into this zone, we put in a dead cat bounce. However, there are some internals that do not look good, meaning if you look at the date of February the 21st, we closed below the 50-day moving average. Never a good thing for the bulls, especially for long-term investors, especially for swing traders. You are trading below the 50-day moving average. It's normally risk off, okay? We don't want to have too much risk on the table when we're trading below the 50-day moving average. Now you can see we've had a day and a half now where we've kind of continued the sell-off from last week here and really starting to flush out. Now we are coming down into the zone of this uptrend from the 100-day moving average, okay? So the way that I'm going to approach the rest of this week is that if we do bounce, let's say, for example, tomorrow, which is going to be the 25th or even the 26th, let's say we have a dead cat bounce and we bounce somewhere in the price of 21,570, 21,600, I would look for a rejection here, okay? Because ultimately what you would be looking at would be a dead cat bounce into supply that could chop around for maybe 1 or 2 days, and then you can kind of see that continuation pattern back down, seemingly to prices sitting between 21,050 and 21,177. Okay. I personally think it's better for the market if we just do something like this sooner than later. That way we can at least get a true test of this support, of this whole rising support that we've kind of held for the better half of 3 months. And it's going to give us a more clear indication whether we are going to reverse and start trying to work our way back up in the month of March, or we're going to kind of continue to come down here, get rejected, and then start really putting in lows. And if we really start to put in lows here, you could definitely be talking about a little bit more of an extended stay down here, which can make things very, very tricky with the 200-day moving average being all the way down at 20,300. Okay. Personally, I would not like to see it get all the way down here. I'd like to do a very quick action, almost V-shaped recovery, kind of come. I would rather have a dead cat bounce happen as soon as tomorrow. Okay, a dead cat bounce as soon as tomorrow that really pushes into this zone. And then by the end of the week, I'd like to be down here. Okay, because in that particular scenario, we can go into next week, which is going to be going into the start of March, where maybe we get 1 or 2 days of consolidation and a hold, and it looks something like this back here. Okay, because if it looks something like this back here, then you can see maybe a flush, a 1-2 day hold, and then you can see in a matter of 1, 2, 3, 4, 5, 6 days, we can do something like this, or we could be all the way back up into the top of the range in a matter of a week to a week and a half. This would then create this downwards flag pattern, this downwards trend line, an area of resistance that if broken through, I don't think that we come back down here for the remainder of the foreseeable future, at least, you know, for Q1, Q2, you know, seemingly as if everything's going to look and turn around. Now, if that doesn't happen and that doesn't play out, right, this situation where we get rejected here at this 50-day moving average and at least back test this whole move down here, and we kind of do something where, you know, maybe we shoot a little bit and then we just kind of start coming down here, and then towards the end of the week you get that dead cat bounce. I could see us next week potentially losing 21,000, and we could potentially be coming down a lot lower, again, especially if there's any type of news that comes out, any type of press conference with Trump, any type of headline that hits the airways, you can definitely see a more drastic decline. We're getting very, very drastic moves here on a macro chart. If you just kind of look at Friday's price action, down 600 points. If you look at today's price action, down 400 points. So the range and the volatility is starting to expand even on the daily time frame. Notice the ranges that we were trading in before the sell-off started. Range of 300 here, range of 300 here, range of 200 points, less than 200 points, range of 200 points here, range of 180 points here. Seemingly, you know, 2.5, 3 times as large now in the last few days. So again, this volatility is not going to last long. Again, if you are a holder, you got to just kind of bite down. You know, perfect time to kind of dollar cost average. You know, maybe we can get a little bit lower prices here if you want dollar cost average. If you're a shorter term day trader, again, any pop tomorrow, if you are going to take that off the open, make sure you get in and you get out, and you want to be looking for the shorts right around this area. Now, if we do something absolutely really crazy, where we kind of reclaim the 50-day moving average tomorrow, and it's just a strong 300-400 point bounce, I would be looking for Wednesday, Thursday to kind of get rejected, maybe put on a little blow off top and then come back down. Okay, that's what I would be looking at. I don't think that we start a recovery from the middle of the range. In the middle of the range that I'm talking about here is we are below the 50-day moving average, and we are below this 100-day moving average. So it's not too common that you see a complete reversal from the middle of the range. Notice here, this closes, or, you know, essentially has the bottom closure of this candle in the middle of the range. However, not before we washed out to the bottom of the range. Notice here how you have some candles bodies closures there. However, it's not before we test the bottom of the range. Same thing here. It was a big reversal, not before we tested the bottom of the range. So basically where we're at right now, I'd like to see a test of the bottom of the range before we see a V-shaped recovery. And again, that might be a little bullish, but it, you know, truthfully, the bulls have a ton of work to do. It doesn't really, the charts do not look strong at this point in time. We would need to get all the way over basically 22,000 before it's kind of safe to, you know, put a little bit of a risk on. I would definitely look for shorter term trades. I would definitely look for quicker take profits on all of your moves. I would definitely lean into the short sided bets a little bit more until we could get over 22,000. And that's the way that I would play it on a day in and day out basis. Maybe take less trades for the time being. That way you can kind of protect yourself as a whole. I'll see all of you guys on the next video. Don't forget to like, comment, and subscribe, and I'll catch you guys all next time.